Hi, welcome to Mark in a Minute. Man, the Eagles were tough, weren't they? We thought they were the strongest team. I didn't think the game was going to be so lopsided, though. Thought it'd be more competitive. We have some analysis on the tariff impact. Everybody's talking about the tariffs and concerned about the tariffs, and the market's reacting pretty negatively when things pop up on tariffs. So we have a framework to think about. We don't think that the tariffs are inflationary currently. So it all comes down to money supply growth. If the money is growing strongly, tariffs are a problem. If they're contracting, tariffs are recessionary. So we're going to walk through that, and you'll have a good understanding of where we're coming from. So how to play the stocks and the tariffs. So the tariffs are going to benefit somebody, and so we need to start thinking about that. And I think it's starting to come to fruition a little bit. So earnings reports last week. So we're always looking at who did well and who did not. So we have some thoughts on that. So some interesting stocks are coming out of that earnings report. Inflation and tariffs. So if you think about this, we talked about this in our white paper on inflation several years back, and Milton Friedman talked about his theory, monetary theory, and it's sound as can be. This was roughly 60 years ago. He put this together. We think it's still very sound today. So it's just simply money times velocity equals price times quantity. So what that is money growth equals inflation really. There's two important aspects of this. It's the money growth and it's the inflation part. So the velocity doesn't change much and you can't change the quantity of production very quickly, but you can over time. So money outstripping the growth rate of the economy is what causes inflation. So the economy has to be keeping up with the money supply, otherwise inflation happens. So when we wrote our white paper, we started to see this occur, this massive increase in money growth. Actually, money growth from the, the beginning of COVID to the end was about 42% increase in money supply growth. Phenomenal. So right now we're seeing about a 4% increase in money growth. That's okay. That's about right. We think that's dead on where it probably should be. So if during COVID, what happened was they massively expanded this money supply. At the same time, they cut Q. That's the economy growing. So that's the quantity of goods that are produced. So they paid people not to work. So money up in a huge way, plus the quantity of goods down, massive inflation. I don't think they knew what they were doing. So going through this, MV equals PQ. So if the money supply is not growing, then you're not going to see any inflation from the tariffs. Actually, you'll see a contraction in the economy because people won't be able to afford the goods if they try to pass along those increases. So likely no inflation if the money supply is not growing and maybe potentially a recession. If money supply is around 4%, as we mentioned, and GDP is around 2 to 3%, that's fine. Maybe just a very modest increase in inflation will occur, but not much. If money supply starts to grow faster, so faster than 4%, say 6 or 7, you're going to see inflation, no doubt about it. Now, how can you increase money supply without expanding inflation? You need money supply growth, right? So you do it by incentivizing growth in the economy so the economy produces more goods. So that's supply side oriented. So that's the supply side of the economy. So that's really positive in the long term to do that. So what we're looking at, so what would cause the inflation to come with the tariffs is if money supply really started to take off, or if government spending started to expand. Not seeing that, right? We're going to likely see government spending contract. Or maybe we see lower interest rates, which incentivize borrowing, which creates more more money supply, higher, faster economic growth. Maybe that uh, causes the inflation to come into play, or the Fed buying back bonds. So as you know, the Fed's still selling bonds in the open market, so that's not a problem either. So when we look at the key factors, really it comes down to the dollar. So if the dollar is very weak, then you're probably going to see some inflationary impact by the tariffs. If the dollar remains strong, steady, and maybe an upward moving pattern, I don't see the tariffs causing inflation at this point in time. So how to play this? So as you know, as Trump announced here recently, tariffs on uh, steel and aluminum, um, and so that will cause those prices to probably stabilize where they are. Okay, and and the market share shifts to other firms. But we think it's kind of interesting. There's some interesting stocks in that area, but it's a tough area to buy into. Steel, aluminum, autos are coming as well. Those are not great industries to invest in. But we see Cleveland Cliffs, kind of interesting company. It's gone from $30 down to 11. It was up nicely on Monday, but we think it could go back to $30. The for sure, there's going to be some tariffs on the European autos as well. I don't think if you put a 20% tariff or whatever it may be on a Mercedes Benz, there's no way they're going to be able to pass that through here in the U.S. So Mercedes Benz makes a great car, BMW, great cars, but you can't pass those sort of prices through. So maybe there's going to be a little bit, but not a whole lot. It's going to be passed through, in my opinion. So CPI comes on Wednesday, and if it's above 3%, we think the market's going to not like that, and it's going to think about the tariffs coming in place, and maybe we see a correction if that CPI report comes in above 3% on a year-over-year basis. So the last three reports were higher, so the trend in the short term is not good, and we don't see a breakout in inflation occurring. And it all comes down to really what's happening on shrinking the spending on the government side. So we think that trend will really start to get in place as we go through this year. Now, the stock market update. So lots of earnings reports last week, and this is the really busy season for me and my staff. I reviewed personally over 40 different companies on their calls, and so what I observed off the calls is I kind of felt like I'm seeing some slowing in the economy occur. So the first couple weeks, they were relatively good earnings reports. The financials started the earnings reporting season off pretty darn strong, and the financials were good. So they had good margins, and not a big pickup on the lending side yet, but the margins were starting to get better. So going into this week, there were some key companies reporting, and again, I kind of felt like what I saw was a weakening in the trend. So Google and Amazon confirmed what Microsoft was going through, disappointing cloud growth or AI growth, I should say. They're one and the same really for these companies. And Amazon increased their capital spending from 80 billion expected to 105 billion. So, which surprises us quite a bit. We think the way to play this is Broadcom, AVGO. So in a couple different ways. So we think Broadcom's picking up market share at Apple. Skyworks had a really disappointing quarter. So 70% of Skyworks sales comes from Apple, and we think that Skyworks is losing market share to Broadcom. But anyhow, the trends at Apple, maybe this is a precursor to what's going to happen at Apple. Not much growth or maybe a decline in their handsets versus what's expected, and Skyworks took a ding on that. But Broadcom looks very interesting. Stocks was up on their last quarter. We think we see several more really strong earnings quarters out of Broadcom. Pepsi, this is one that we've liked. It's pulled back quite a bit. If you strip out the currency impact, right? So we're doing the second derivative to find some positive news in Pepsi, but it's there. So Pepsi earned 14% earnings without the impact of currency. So without the currency, this company is performing really well. They're growing internationally. You know, the U.S. is slow for them. That's going to pick up as we go through the year. We think it's a good valuation. If you're a conservative investor, which I am, but I'm also aggressive when I see the opportunities. But being conservative, Pepsi's a really nice play at these valuations. Boston Scientific, you know, they make medical devices. Really strong quarter, up like 19%. And Ralph Lauren really is coming back strongly. Their comps, so their comparable store sales up 12%, very strong. So we're seeing some, you know, green shoots in some of these consumer stocks. Qualcomm, those guys are really smart. I want to be in Qualcomm stock, and it's languished a little bit. So I like these guys. I think they skate to where the puck's going, and we want to own this at some point in the near future. But their quarter was driven by Samsung, and you know, the Samsung has a new product cycle going on there, but they're losing. They're being phased out of Apple, so that's not great. Everybody has known that, but it's a little bit of a headwind for Qualcomm. Amgen, AstraZeneca, and Pfizer, all good quarters. So we like all three companies. We own Pfizer at this point in time. Like to add these two other stocks to our portfolio at some point in time as well. Merck and Regeneron, not great. So gotta stay away from these two guys. Really not good quarters. Hershey and Mondelez. Now I want to show you this chart. This is cocoa prices. You know, pretty steady for a long time. Boom, weather in West Africa. They're claiming, you know, climate change. So it's more than that. It's not climate change. They've had flooding and some other issues. But the price of cocoa has gone up fivefold in the last year or so. So this is a problem for these two companies. These two companies have been dealing with it. The earnings at Hershey, as an example, roughly speaking, went from $9 to $7. So you can see it's had a hit on the earnings, and the stocks come down. Well, if you're a producer that's in Costa Rica, you're going to try to fill this. It's not going to be easy. So there's competition in this market. So eventually, cocoa prices are going to come down and be a big tailwind to both of these companies. We think, you know, Mondelez reached out to Hershey wanting to buy them. We think that is just a fantastic idea. Those two companies coming together. Hershey, you know, pushed them off, but we think it's a great idea. Maybe at some point this year they'll come back and get together again. Valuations of the S&P. This is at the bottom of COVID, 15 times earnings. This is in 2022. Now we're at 22 times earnings. So just keep in mind the peak of the market in 99, 2000 was about 25 times earnings. So we're not far from that. You know, what we've been talking about is the rotation. The rotation has to happen to keep the market going. You need to rotate. So guess what's happening? Technology is down 2% roughly for the year. Everything else is positive. Some sectors nicely positive. So we're seeing the rotation. I kind of feel like, you know, there's a shoe to drop here, though. I kind of feel like, you know, without continued, you know, news coming out, you know, continued things to drive these sectors up, we're going to start to lose the momentum in the markets. This is my gut feel for it. So we're being a little bit more conservative than we were a couple weeks ago. But anyhow, we've had a nice bump off the bottom as well, our short-term bottom. We had a nice bump up in the stock market, and we're losing the leadership in technology, and it's moving to other areas of the market. Maybe part of that will be driven over to some of these tariff-related plays, but keep in mind that can't last all that long. We're seeing some movement in the healthcare sector, which is good. A lot of innovation going on there, but we need to keep that rotation going. At some point in time, we're going to get a correction this year, if not worse. But currently, we're cautiously being bullish, and we're a little bit more cautious now than what we were several weeks ago. So if you have any questions, please ping me. Come to my website, Patrick Adams CFA. Sign up for a hard copy of Market Minute. We'll send that to you every week. Take care.